Let's shift focus to the banking sector. It has some inherent advantages with falling inflation as well. The banking secretary was speaking with us yesterday, and he spoke for the first time of some concrete steps for autonomy for public sector bank boards and bank managements. And then, of course, separately, bank managements have been talking to us about listing their insurance and other subsidiaries. So a lot of stock price driving news on the anvil. Suresh Ganapathy, the banking analyst at Macquarie Capital Securities, is joining us, as is Abizer Diwanji, the partner and national leader financial services at ENY. Gentlemen, thank you very much for joining us. Suresh, let me come to you first. You have been extremely bearish on the public sector banking piece, but do you think now things are falling in place to probably get you closer to reversing that idea, both the way in which inflation is moving and those statements on autonomy coming from the banking secretary?
See, there are, of course, Lata, quite a lot of implementation challenges. Autonomy could be given to the board, but remember that boards, the PSU banks are heavily unionized. So you cannot really have a leaner structure or fire employees or reduce the working age, average working age of the employees, right? So to bring in roundabout change or complete systemic change in the entire PSU banks is not going to be an easy task. And secondly, any of these reforms will at least take 4 to 5 years to significantly benefit the PSUs with respect to board autonomy and all being granted. So yes, while it is definitely positive, it is a step in the right direction, benefits in the near term would certainly be limited.
Okay, no, I take your point. I'm not expecting IOB to become HDFC Bank at all. My limited point is that from where the PSU banks are at this juncture, with largely politicos and interested parties on the boards, in several boards, perhaps not all of them, to a situation where we see in the Gujarat PSUs where the politicos were removed, and we saw a lot of even IIM professors and other professionals on the board. At least that much of a progress perhaps one can expect going by the Prime Minister Modi's previous record in the state of Gujarat and what the banking secretary gave us to understand. That incremental change that one expects in the composition of the board, will that make you change your view on their performance in a year or so? Will that start impacting margins and ROEs?
See, the stocks have already rallied 25% or 30% from the bottom, so without any visible improvement in fundamentals. So much of these positive news, at least I think, would be priced in. Now, for a further 20-25% rally, you would definitely expect all these positive changes to result in any improvement in ROE, which is where we are expecting there could be some challenges, because the baggage that they have inherited over the course of last 2 to 3 years is something which cannot be corrected, in my opinion, over the course of next 12 to 18 months. However positive the reform trajectory is.
Okay. Well, let's pose that question to Abizer Diwanji, partner and national leader who joins in the financial services at ENY. Abizer, hi, good morning, and thank you for joining us. Do you believe that this entire process could be as challenging as what Suresh was pointing out, and also not just on the autonomy for PSU banks, so many other statements with respect to a 5-year tenure for the chairman, more independent directors on the board, etc. What could all of this really do to some of the PSU banks and the industry as a whole?
No, so I concur with Suresh in the sense that this is the right step in the right direction, no doubt about it. Surprisingly, they've also said that they're very open to the PJ Nayak committee, which is also good news. The way I look at it, frankly, yes, while it will take time for this thing to come up, the near-term benefit is that if there is a capital raising program, which is a near-term requirement, I think these steps in the positive direction will certainly help raise that capital raising program. So I think in the short term, we believe that PSU banks need a lot of capital. 2.4 trillion is another number given by the finance minister, which we pretty much concur with if you want to meet Basel III norms. I don't think personally this can be raised out of domestic people, as has also been said. What will have to be done is there will be a need for a lot of institutional investors to come in. They will demand governance, and this is the right step in terms of governance. But I also agree, apart from just the top level changes, the 5-year tenure for the chairman and the segregation of the post between the chairman and the MD. What's more important is how are we building up the human resource base, which is at the bottom.
Right.
So while labor reforms, unionizations, etc., will not go away immediately, what can happen is that there could be a skill set enhancement. And I think whatever I see in my interactions with PSUs at the GM and levels below, there is a lot of need for skill sets enhancement and filling up the gap. If you look at SBI itself, the whole mid-tier management is going to retire in the next 3 to 4 years. How do you fill that skill set gap? How do you enhance the existing people to rise to the level? How are you able to recruit laterally from the market? I think if that is built in, the governance culture will build by itself. So it's a step in the right direction.
Okay, and no, I take your point about labor unions being probably a very big piece that the government will have to tackle. But Suresh, let me also nuance what Abizer said about the banking secretary's statements on PJ Naik committee report. What he said was we didn't have the time to apply our mind to it. We have neither accepted nor rejected it. When I pointedly asked him, do you see you scrapping those bank nationalization and SBI acts and bringing banks under the Companies Act? Again, he said thought hasn't been applied. Those are all under consideration. Would you give any points? Would you advise anyone to go long on public sector banks just yet in anticipation that they will come under the Companies Act? Or if signs are that they will be brought, will that be a major positive?
How is governance to do something by bringing somebody under a Companies Act or a holding company, right? And all these
not holding company, not holding company. Suresh, Companies Act simply because that act is more demanding in terms of independent directors.
Yeah, okay, so possible, definitely it is possible that if that is being done, there could be some kind of a positive, what we call re-rating in these PSU banks. But we need to see all these things translate into, as a stock market analyst or as an equity analyst, translate into better earnings trajectory for these PSU banks. And that's where I continue to be a bit more skeptical than everybody else. So, for example, the things like capital raising and all which has been talked about, that needs to be done, which we are not yet seeing at this point in time, right?
So you will wait for that avalanche of shares to come because that might initially depress the prices and may bide your time to go positive on PSU banks. Is that your position?
Yes, that's right. And then, you also need to understand, Lata, that look, QIP is the fastest route to raise money. Why not a single PSU bank is coming to the market and raising money when the markets are very supportive? What are they waiting for? The banking secretary says that he wants to issue shares to retail investors. I mean, if institutional investors are ready to give in money to the QIP route, why not come to the market and raise money immediately? No, and that's where my reservation has been. They're really actually going in the wrong direction in my view.
Absolutely. That was a grave tactical error that all the several PSU banks whose QIPs were waiting with merchant bankers have now been put on hold because of the statement by the finance minister in parliament that he wants retail shareholders to own them. That has obviously taken away a lot of shine which perhaps could have come.
And that's what the finance secretary told us yesterday as well, that retail shares will be
terribly
looked
unfortunate
at before QIP. But let's shift away from this topic for a bit and talk about the listing or the eventual listing of the banks, the insurance subsidiaries. Abizer, I want to come to you on this. In due course, if this listing is done, what kind of valuations do you think some of these banks like ICICI Banks, SBI, etc., their insurance subsidiaries could get? And how much money do you think could be raked in?
So, if you look at a very conservative estimate, from whatever I've seen in analyst reports, we haven't really measured anything in terms of actual valuation. But we think that, SBI and ICICI, if you just look at the two large companies who kind of disclose a lot of information, though they only disclose embedded value and not the NBFE multiple, which is also a key factor to valuation. But if you look at just these two companies, we think that they are approximately valued at around 25,000 crores each. This is the life side. And ICICI's non-life would be around 4 to 5,000 crores. If you're looking at it, if you look at a 23% divestment also, and I'm not very optimistic of beyond this 23% divestment. Even if they have to do a 25% for listing purposes, then maybe they'll cut in 2% will be the domestic shareholders. But if you look at that 25% divestment, they're looking at easily raising 7 to 8,000 crores just at one bank. And if you look at raising 7 or 8,000 crores, it's not about how much they can raise on the valuation of those insurance companies. It's more important as to where this cash will get deployed within the financial services conglomerate. And if you just deploy that cash into banking and hopefully lending will take up in a period of time, you will find that the enhanced value of the financial conglomerate would go up at a multiple of that amount. So frankly, I think this is more a resource mobilization and obviously a monetization of the insurance business. Once actually cash comes in, the real value will come out.
Same question to you, Suresh. The government and the finance ministry are very keen that banks should list their, or whatever, sell off the stake in their subsidiaries. It looks like SBI Life could be a candidate. If it were, how does that enhance or otherwise impact SBI's valuations? Any thoughts on what it might get at the time of listing itself?
Yeah, okay. So to begin with, to be honest, Lata, SBI is the only one which can do this, which has some value coming from its subsidiaries. None of the other PSU banks have any of the subsidiaries which is going to add any significant value. So I don't know what the finance secretary means by selling non-core assets, because none of them have non-core assets if you leave away real estate for the time being, because that's a grey area. We don't know what is the real estate valuation and all those stuff. Then coming to SBI, where there can be some value coming out of it. See, specifically from an analyst rating perspective or a valuation perspective, today, for example, we are valuing SBI Life anywhere between $2.5 billion kind of a valuation. Of course, it is lower than the valuation which some of the market participants are suggesting. But if there is some element of what we call a market pricing which happens because of listing of the life insurance subsidiary, or for that matter any stake sale which happens, then accordingly there could be an additional value which could be attributed to the stock. So that's from a valuation perspective where it would be beneficial. But remember that the contribution itself of SBI Life to SBI's overall valuations is not more than 4 to 5%. So can it move the needle in a big way from a valuation perspective? I don't know. I don't think so rather. The second part is on the actual capital mobilization perspective. See, SBI management themselves have said that over the course of next 4 to 5 years for Basel III implementation, they alone require $10 billion of money. Maybe you get about $500 million of value in money from this, which is still grossly inadequate compared to the $10 billion of money that they require over the course of next 10 years. So I don't think it's going to be a game changer in any big way. I mean, it still to a lot extent depends upon the ability of the government to infuse and obviously ability of SBI to raise money from capital markets.
Separately, as a watcher of both banking and the non-banking space, this announcement of 49% composite FDI and FII by the budget, how does it change your valuation of any of the stocks? Anything, I mean, Reliance Capital, Exide, what have you, Max, and of course, say ICICI, the whole thing. Any of the stocks you would consider better valued now?
See, we can't really comment on unrated companies like Max or Exide, but you know, we do cover Reliance Capital. Look, it is of course relatively positive because today, remember Lata, the insurance valuations are very suppressed. You know, in 2007 we used to value ICICI Prudential Life at $13 billion. Today the valuation of the same company is closer to about $2.5–3 billion. So you can imagine the amount of compression that you have seen in the valuation, partly because of the heavy compression in multiples also which we are now awarding to the insurance business, considering growth prospects have actually dwindled quite a bit. So clearly if there is some element of a market pricing or any kind of a valuation which is being given or established because of new players entering the market or existing players actually jacking up the valuation, then we do have some kind of a transparency or the kind of multiples that we would like to award to these businesses. So there is an upside which definitely comes, to be honest, across the board, specifically for the cases like Reliance Capital, where more than 50 to 60% of the valuation comes from or value comes from life insurance business. There is a significant upside which could happen in case the market valuation is far higher than what we are valuing it.
Okay, completely out of time. Abizer, anybody showing interest because of this 49% FDI?
Certainly there's a lot of interest from partners who have not yet entered India.
Okay.
So frankly, there is a lot of talk. People, of course, are waiting for what the real guidelines are. Is there going to be a cap on voting rights? What do you really mean by this whole Indian controlled, Indian managed? Because I think it's now under the FIBP route. I think if the FIBP is more conscious towards looking at the fact that somebody comes in as a 49% shareholder, though minority, but a significant minority, and they consider their arrangements that they do or their shareholders agreements that they do in the light of those ground realities, I think there will be a far more interest. But I think there will be a wait and watch to how this happens, simply because it will now have to go through an FIBP process, and there will be control mechanisms and various kind of control restrictions that companies will want to put in. So how does that fit into the larger ambit of Indian managed, Indian control will have to be figured out.
All right. All those would be roadblocks, certainly. Suresh, Abizer, thank you very much for giving us some idea of all the changes that are happening or likely to happen in the banking and financial space.